Welcome to the Thomas Bepko podcast. We've got season 2, episode 18, and I'm pumped about another episode. I got my boy George Salas. George is the CEO and founder of Empress Capital. He's a leading real estate investment company. He's an entrepreneur. He's an investor himself. He's got a remarkable journey, and I'm really excited to have him on. So welcome everybody, George. What's up, buddy?
Yeah, what's up, brother, man? Thanks for having me, man. I'm just excited to be here and show some love to your audience and, bring in some massive nuggets, man. Thanks for having me.
Yeah, we love the nuggets. We're going to drop them. I learned a little bit about you. So our background, we had met right through a mutual friend, and I did a coaching call about short-term rentals with George, and George just dumped a ton of value at about 3-4 pages of notes. And look, a lot of people are in your space or getting into your space, right? Whether it's short-term rental or long-term rentals. And, a lot of my listeners, and I know a lot of people, and we're on the same team here and same page about what we're all trying to do. So we're ready to drop them on them. All right.
Let's do it, man.
All right. So your journey, right? Describe, how did you become the CEO of Empress? Like, where'd you start? Where are you from? What happened? How'd you get there?
Yeah, absolutely, brother. So my journey started when I was 6. Just to be super transparent, I am from a small town in Peru, right? At the age of 15, we moved over here to the U.S., right? So, and I've always just wanted to build a business, right? And make an impact and build a community and help people, right? So, when I moved here, I didn't even know English, right? I didn't know anything, right? So coming here, to being able to do what we did or are doing it's an amazing opportunity for me. So I'm so grateful for that. So I started off in hospitality, right? I started off working at restaurants, bars, and then I ended up building out a few years later a marketing company that marketed venues and marketed events here in Houston, Texas. From there, I did that for about 7-8 years before I decided that I wanted to build our own venue, right? So I put together massive events every week, every month, right, for different business owners. I would partner with them strategically on the back end, and our biggest event was like 3,000 people. Okay, so that was like 2015, right?
Wow.
Around 2014, which is fast forward 7 years after I started this business, right? I wanted more. I wanted something bigger. I wanted to make a bigger impact, right? And I figured out that the way to do it was to be partner of one, right? Of an actual venue, so I could run my own events. I did, right? I ended up
Very smart.
back over, and you're gonna hear this out, and you're gonna be like, "Oh my goodness!" Right? So it was great, but then it became a struggle, right? I ended up investing as a limited partner, someone that didn't, just a limited investor, limited partner, without having the managerial duties of this particular business. So did that, came into this business. They built that $1.3 million venue. The venue launched, huge debt, and 2 years later, we ended up getting our doors shut down. So me as an investor, I lost every penny I put in, first of all, right? So for me, I didn't know what to do, right? I was broke, I was broken, and I was really just when you fall into a rock bottom, it's either you stay there or you get a partner, right? So I did not want to stay where I was at, and I knew that there was something better in me, right? So I turned around. One day I received a phone call from a friend of mine, and he essentially said, "George, I need you to come to my flip, right? I fixed and flipped the property that he had at the time." I drove over there, which is 20, 30 minutes out of Cypress, Texas, which is where I coincidentally live in right now. And I walked into this property, and then he had 15 other people, right? And then for 3 hours, he hammered us on get your butt out of where you're at, of the gutter, right? Wherever you are in life, right? If you're not doing X, you could do better. Like, get up. You can't stay there where you're at, right? And that for me, that was a wake up call, right? An internal, external sort of like slap in the face. Get up, right?
We call it a spirit. I call it a spiritual experience.
There you go. Spiritual experience. Somebody just calls out something that you could be doing, right? So for me, I have to do it, right? And next day I get up. I'm in my apartment at the time, and I don't know what to do. I'm broken. I'm broke. But this epiphany, this thing goes into my mind. It's like, George, you could do this. So that's when I decided that I was not going to stay where I was at, and I was going to go all out of real estate. This is the end of 2017. So I go out there and I start attending networking events to build relationships. I buy books on Audible to learn about real estate, personal development, and that's what really my entrepreneur uh, career started. Because before, I didn't know, I wasn't a true entrepreneur. I was a solopreneur, right? And then what they say out there, that whenever you really get out there to make an impact in people, you've got to build your infrastructure first, yourself, right? So that's when I got into the personal development world, and I got into really self-help, self-development. So that was when the journey started. 6 months later, or 4 months later, I picked up my first fix and flip, right? This is early 2018. 6 months later, I was already hitting, $50,000, $60,000 a month in my wholesaling business at the time. And then I decided that at that time, I wanted to create more of a consistent flow of cash flow, right? And for me, wholesaling, which is great, right? Selling fix and flips is great chunks and great influx of cash, but we needed something that was more stable, more predictable, and something that I could draw from every month and know that I'm going to get that to pay the bills, right? So that was my transition there. Went into short-term rentals. By the end of 2018, Thomas, brother, we had 20 Airbnb arbitrage properties. What that means is we did not own all 20, right? We leased most of those 20. I think
Amazing.
at the time we were changing one of them it was one of the flips, and we were turning it into a short-term rental. This is going into 2019. Now I'm like, okay, well, this is it. Right? This is what I was waiting for. And then after that, I decided, and I made a huge decision, which is my 10x jump, my next 10x jump, and that was to really go all out in this business, right? So I started turning some of my houses into short-term rentals, and then I went all in arbitrage, right? Leasing properties and subleasing them. Most of these were apartments, Thomas, so they were not your big homes. I only had a couple nice homes. Then, I mean, we all know what happened in COVID. COVID hit. That month, we were about to hit $70,000 in revenue, biggest month yet, and things were going great. COVID hits, ghost town.
Oh man.
Ghost town. So I had 36 out of those 40-ish properties were actual small apartments within a 2-mile radius. So I struggled to keep the business alive for a few months. Right. Our first month of COVID, like our sales dropped by 50%. We were projected to do 70. We only did like 37. The next month we only did like 22K. So there's another lesson, another slap in the face, right? And then from there, I decided to make a transition, right? The transition was, like, okay, now that I'm learning from my mistakes, right? What can I do so that we could build a more sustainable business, right? Because I mean, you could have never predicted COVID, right? Nobody
No,
could.
you couldn't. People
So
thought it was going to be the end of the world at some point. It was, you watch it. People sitting watching the news, and the news didn't freak you out, and then people were started to become like tamed to this lifestyle, and like it had to be broken, man. And you couldn't predict. You were like, hey, you know what? I'm just going to keep pushing, man, and try and be as normal as possible, you know.
yeah, brother, I
So
kept
I mean,
pushing.
look, you overcame a lot of struggles, man, that like a lot of entrepreneurs go through, and you said, so many things like impact, right? Creating an impact. Impact's a big part of my story as well, and I mean, you're a kid from Peru, and now you're like the short-term rental king. Like, good for you, man. And that, like that to me, that's inspiring, And is it such a lucrative space? So after COVID, you're making now, went back normalized after COVID, and you're still doing it, or what do you think?
Yeah, absolutely, brother. So at that time, I was like, okay, well, what am I going to do, right? Well, there was an epiphany there. Out of all the properties we had, the homes were crushing it, right?
Yeah.
So if you go back to COVID, the data, the market didn't drop. The market actually grew. The short-term
Yeah.
rental demand grew. The number of listings declined, and then the demand grew. The revenue grew. right? 2021 was our best year ever, and I don't think that will ever repeat in this industry ever, right? So, but there's one thing. It was the smaller units that we had to get rid of. So when our leases ended, boom, we got rid of the leases and went all in with the houses, right? From there till now, we've been able to transition our portfolio into a highly profitable property portfolio with just single family homes between 3 to 6 bedrooms, luxury-ish short-term rentals. We buy these properties through creative finance, Thomas, 3, 4, 5% interest rates. And instead of leasing a property that would cost me, like $8,000 to come in, on a lease, I buy them through creative finance, and I spend $10,000, $15,000, $20,000 down.
Yeah.
And I still exit a short-term rental. But now the difference is that we create lifestyle assets out of these short-term rentals, right? You buy low interest rates, low money down, still equity, and then we sell them as a short-term rental on the market. We rent them, right? So that's our strategy, and we've been able to, make a huge transition, brother. We just launched our private equity fund about a month ago, right? And we're raising quite a bit of money to launch this fund and scale our portfolio. Last year, my wife and I bought 8 properties. We syndicated 2 properties. And right now, we're just on that journey to make a bigger impact in this world by creating more opportunities for investors, for our clients, and for guests out there. People want beautiful properties, right? So, and now I get to hang out with people like yourself. I'm part of several masterminds where my network has like 10x itself, right? Just because I have joined these communities, and now I'm part of different communities that high leverage people. I mean, you know all about that, brother. So
well, I mean, look, a lot of people need to understand, like, you have to have many different avenues, right? Especially you've got to be in the investor, and it all comes down to the community, right? You have the investor community, you have the real estate community, you have the soccer community, you have the jiu-jitsu community, you have the Hispanic community, you've got the Irish community. Everything's about a community, right? And being where you can help and add value to the community, just like we're trying to do today. And dude, the short-term rental, again, I'm fascinated by it because remember when we had talked and we went through it, like, I'm really interested. I know a lot of people are. What do you think some of the challenges have been, right? I know you're doing it well. Your process and strategy, you kill it. Have you faced any like adversity? Like, I know COVID, right? That was some adversity, right? But why do you think it came back?
Yeah, absolutely. So the market actually had a very odd curve, right? So the demand went up and the number of listings declined by 20-25% during COVID, right? Where that caused a yield, a curve to go up by a lot. So a lot of people made tons of money in 2021, but then it normalized in 2022 as it started coming down. And what happened was there was a complete shift, right? So the people that were out of the market came back, even though interest rates were still really low. So they started buying a ton. So in 2021 and 2022, the market normalized and it went up. So the biggest challenge investors are facing today, right? Airbnb hosts are, number one, the market is completely saturated in many markets, not all of them, depending on the regulations, right? Now, in order to fight the saturation, you've got to create or have your own strategy to develop the strategy to beat the competition, right? And our strategy has been creating beautiful properties that literally in beautiful recession-resistant markets that crush the competition, and then they stay on the top 10% of their own niche and their own market, right? And we do that with our process, right? We've got a 5-step process, right? We focus on the market first, right? Finding the perfect market. Then we focus on finding the perfect property that fits the market, right? The market determines your prices. The market determines how much revenue is going to come in for those particular types of properties. And we always like to pivot ourselves and find the top 10% of properties, target those, create properties that are better than those top 10% properties. And then it takes our complete strategy on what type of property to acquire, right? And typically, like here in Houston, it will be, different amenities like pools and hot tubs. And we've got a property right now that we're triplex that we're launching in Cypress, Texas, with a freaking pickleball court, pickleball basketball court built out there.
Great. Does that get pricey? That doesn't, like, these amenities though. Like, I guess if you get low and you can go better than your 10%, you increase the amount in the amenities, right? Like a 3 to 6 bedroom house, right? Your pickleball court, like that's crazy. That's amazing. Like that sounds fun as hell. I can't wait. I'm gonna come
we have
stay.
a pool already there, so we're putting a hot tub in this
Oh
particular
man.
property, and we're adding a there's already sort of a pergola. We're adding a cover area, so now you have a covered patio, building an outdoor kitchen, and putting the pool. Like this whole thing is costing us over $50,000. So does it get pricey? Absolutely, but imagine if we just put that property, we bought it. Let me just give you an example, right? And we put down I'm going to, for the sake of numbers and being even, I'm going to just put out those set numbers, okay? Yeah. We invested $100K, okay? And we make $90,000 revenue. 30,000 out of that is profit, right? So that's 30% return on our money for that one first year, right? Now we invest an additional $50K for this pool. Now we have $150, but the revenue for this triplex with the pool and hot tub and the pickleball court and everything would go from 90 to about 150. That additional 60,000, there are way less costs to that because a lot of our costs are fixed, right? So let me give you an example. Utilities are never going to go, they're not going to double or triple if you add a pool, right? So they're just going to increase 10, 15, 20, 30%, whatever it is. Yeah. But our top line revenue, so when we get a higher top line, our fixed costs to stay where they're at. So 50, 40,000 out of that 60 grand additionally that we're bringing in revenue for year one, right, 1 through 5, is now profit. Imagine. So you were going to make originally 30 grand on that $100,000 investment. Now you invest in an additional 50 and it brings in an additional 40 grand. That's 80% cash on that cash. So if you didn't make that move, imagine if you just left the property as it was and launched it, it had a pool and it was cool. It just had a pool and it was a backyard. That's it. It's nice. You would do okay. You would still make some money, right? 30 grand a year, 100,000 investment. That's not bad. But imagine if you could double that. Imagine if you could bring in $65,000, $70,000 in cash in one property. It's very freaking possible today in this world. So that's
the strategy. That's the golden nugget right there. Well, thank you for sharing that, man. That's so intriguing. I told you I still have these 2 properties. We could talk offline, but I'm itching to short term them. I got you've also done 110 over 110 transactions. Reading your bio, that's impressive, man. 110 transactions. And do you do a lot in Texas? Like, cause you're in that area. Like for me, my investment properties, most of them I can touch. Why? Because I've got maintenance, repair. I've got everything right there. I've had properties that have been in different states and investment properties. I have one in New Jersey. It's probably like 200 miles away, but I've got a crew on the ground there. I'm known there. I have my process and system. So I know a lot of people will be from New York, but they've got Airbnbs in Texas, right? Mm-hmm. Do you focus generally in your area or do you focus generally out of your area? And what do you recommend? Right? Because I know myself, it'd be a good question that I'm asking genuinely.
Yeah. So sure thing, brother. For the listeners out there, if you're just getting started, it's always better to get started around you because you need to feel it and get used to the things.
Touch the property.
Yeah.
You gotta touch your property.
That's if you're just getting started, right? But for us, we've been in this business for 6 years, done over 110 transactions. 65-ish of those have been short-term rentals, okay, that we've launched. And that's not even including, the 60 businesses I've consulted for in the past, right? That's just mine. That's just my transactions, right? So we focus on Houston properties within a 65-mile radius per. Our fund is opening up markets all across Texas because we obviously have to build teams. So we build teams and AKA our boots on the ground, right? Our asset manager creates this entire ecosystem of people that we can rely on to do staging, right? The design comes virtually, but to do the staging, the repairs, to do the maintenance, the cleaning, all these little things that required for us to run a business. We have our teams in different areas, right? So it is not a
And
problem to do it anywhere outside of Houston at all, right? But go ahead, what were you gonna say?
do you automate a lot of that too? Like the team, obviously you automate the team because I know a lot of times on some of the apps and we talked about you can automate the transaction or automate your process. Do you
Mhm.
mostly automate or do you have like more of a manual? I'm curious on your take on this.
Absolutely, brother. So this business is all about tech. We use 4 different softwares right now that
Wow.
automate our entire property management ecosystem. So let me kind of break this down for you.
Please.
The fund itself has our private equity company manages a
Mhm.
fund, and it manages also properties outside of the fund. We have a
Okay.
completely different team for that now oversee that business, right? Personally, our in-house George Salas' property management company is automated, and the fund itself is building their own team, and all of it is going and it is automated, right? So we use software for everything. The cleaning is automated. The maintenance
Yeah.
execution, the cleaning, the property management software, the communications are automated, the
Yeah.
messages are automated. I mean, if you don't use tech, you're in the ancient days, right? So you've got to use tech, and that makes it a lot easier. So we run a lot leaner because of tech.
Yeah.
Otherwise,
Of course.
people will have to do it, right? And it costs a
Yeah.
lot more to employ people than to buy tech, to utilize different apps, right? So
And
to answer your
manual
question,
labor is more expensive. Yeah. Manual labor is going to be
mm-hmm,
more expensive than the technology costs, right? You know,
100%.
that's good. So we touched a lot on there, and that's actually it's all the information is valuable to me too because you know there's a lot. I love real estate. I love every piece of real estate, right? So the more knowledge and the more connections that I can make and we can make in the world of real estate in general, I'm super passionate about. You know,
Yeah,
and
this business is
real
constant
estate is
relationship.
constantly evolving, right? It's constantly evolving and it's moving. Any new trends or strategies you want, like anything coming down, like what are you recommending? You see anything coming down the pipe, or what are you thinking for 2024?
Absolutely. In 2024, we've implemented 2023, we've implemented a new strategy. As we open up these markets, we we have an underwriting process that has a market research component to it. Okay. And what that means is we've done a tremendous time of due diligence. We've spent a lot of time creating what we call our relative change recession resistant strategy. Okay, so
Okay.
and I recommend this for anybody. If you're just looking to invest in short-term
Yes.
rentals, find markets that have grown in the real estate sector, right, between 2007 and 12. So we've created this huge list of markets that they're not volatile. They're very stable markets. Imagine going and investing only in slow growth markets. Why? Because we want slow growth, NOI, right?
Okay.
We did the same thing in hospitality, right? We took the data from the GDP, hospitality GDP, right? And then we added the data. Now we've got a list of markets that perform well in the hospitality sector. So imagine having a list of markets that never went down in real estate. It had a slow growth, right?
Mm-hmm.
Value. And then hospitality, restaurants, hotels, et cetera, et cetera. They also had a slow growth and merged them together. Now you have a crossover of strategically well recession resistant markets. We take the same data, a list of 100 plus markets, and we compare it to how are those markets doing in revenue, occupancy, also demand growth, supply growth today over the last 5 years. That's our strategy.
Wow. Well, that's another dropping nugget bombs. I appreciate it. That's a great way to look at it, man. And it's look like anything, you're taking the time doing the research up front, right? You've got to be prepared and you've got to stay innovative, right? And you've got to understand your markets. And dude, you said a lot of good stuff. We've got, what about lifestyle too, right? Like you got the lifestyle, the real estate investment lifestyle. You know, you're a coach. Are you coaching too? Right? Are you doing some coaching? Because you
Much,
coached me, you coached me for an hour on it, right? So I
yeah,
figured like you had to.
We do some events. We're really focused on our fund efforts to build a portfolio, and we are getting back into doing events to educate people probably later this year, right? So, would I categorize myself as a coach? Absolutely. I always love to
Good.
coach,
Yeah.
help other people, right? So,
Yeah, for sure.
yeah, man.
I'm gonna say, I mean, you coached me, you helped me, and this is it's a coaching experience. What do you so where can our listeners find you? You know, you've got Instagram, you got your website, right? You did something virtual today, right? I did miss it, but I'm on the list now of the next one. What did you do today? You had a virtual meetup?
Yeah, we had our fun webinar, right? So
Fun one. Okay.
we had a webinar this morning, went very well, right? So we do obviously by invite only some of our webinars. We'll probably start doing monthly webinars starting in February,
Okay.
right? So March, and yeah, man, it was great. So our community is essentially we've got a Facebook group, right? But where listeners can find me would be georgesalas360.com is my social media site, and then our company site empresscapital.com. We'd love to chat.
Thank you,
So
man.
appreciate having
And
me, brother.
look, I appreciate all your time and the value of again, I said it a lot, the impact and value and even like getting to a place of rock bottom. And I was helping a friend of mine reached out, and I'll end with this. A friend of mine reached out yesterday and he was having issues. And I'm like, look, I wasn't able to like understand and find myself until I got to that last place, that rock bottom. Only in the last analysis is where he may be found in my life, right? I was able to find a higher power in that moment. It seems like you had that spiritual experience in that moment, and that what did you say? You called it it was a. Hold on,
And
I'm
then
gonna
wait,
start that one over. We gotta edit that. What'd you say? Epiphany. Why did I forget that fucking word?
that
Epiphany.
awakening.
All right, so let me go. Let me start that over, Nicole. We gotta edit this. Epiphany, such a hard word, easy word. So it was, and George, your experience, you called it an epiphany. And sometimes to find themselves, myself, yourself, you have to get there. You kind of gotta sometimes some people have to get there to be reborn and recreate and get to where they're trying to go. And that was one of the worst moments and the best moments of my life. So thank you for sharing that. I
Absolutely.
appreciate you being vulnerable. I like, it's a tough. Some people don't want to share their story, and that to me, it's a remarkable, and people admire that, and I admire that, man, and I appreciate you sharing that. So
Yeah,
thank you.
absolutely. Sometimes people love to hear and it's silly, like whenever somebody's hearing a story, if they can apply it to your story, right? And then
Yep.
I'm just telling the truth and what happened, right? And people love the ingenuity of things. Like they love to listen to because everybody has a story, right? They love to listen to other people's stories. So and now just to me, it's like a lifestyle, right? That journey, I already know that in business and entrepreneurship, whether it's real estate or whatever other industry out there, there's going to be ups and downs. The stronger that you are, it's because you've been through those tough times. And I've been through those tough times. I've dealt with all kinds of things in my life, brother. So appreciate you having me, man.
Well, man, I appreciate you coming on today. George Salas 360.com. Check him out. Now becoming a friend of mine, investor, entrepreneur, and the short term rental king. All right, George. Thank you very much. We'll talk soon.
Thanks,
Peace
Thomas.
out.